welcome to our webinar today on To Be Successful in Business, focus on what you do best. I'm Trudi from Evoke Bookkeeping, and I've got Matt here.
Hi, I'm Matt from Evoke Capital.
And I've got Nick.
Hi, I'm Nick from the CFO Centre.
So we would like to share, I suppose, our experiences on what we see with business owners in their day-to-day life in business, as well as, especially right now when a lot of the businesses are trying to borrow some money and what the banks are looking for, because it is challenging times in trying to get some funding, but I'm sure Matt will tell us a little bit more later. So let's go straight into the questions. And I think these are questions that are relevant for business owners to understand what you guys actually need to know in the world of finance. Okay, so in today's market, how important is business forecasting reporting? And I think Nick will be able to share his experiences and what's going on and with business owners that are, I'm going to say, head in the sand sort of stuff.
I think what you tend to find, particularly with the SME sector, is that people are very much just reliant on history. They typically will employ people like Trudi to do their bookkeeping, and then they will also have a tax accountant who will prepare the tax returns, sometimes up to 9 months after the end of the year. So often are living from day to day, really just knowing whether they've got enough money in the bank, not necessarily knowing how their business is performing. So if a business is going to succeed and is going to deliver the dream that the founder wanted, there's got to be some element of financial expertise to help them. And where that comes in is both in reporting, forecasting. In terms of reporting, it isn't just as simple as having a P&L. A P&L, yes, a P&L can be produced from zero, but to be honest, it's just a set of numbers that if you don't use them properly, doesn't really mean anything. And our experience is that's what a lot of people do. They print off a P&L at the end of the month and file it, and that's really what it's used for. There's a lot of key information in there to make sure that businesses succeed, like how well are their individual products doing, what sort of gross margins are they doing, how are they doing with their expenses. And initially, really, each year a business should be providing themselves with a budget, which is a plan. And the one thing that will be wrong is it's wrong the minute it's written, because it is a plan and it's not reality. But you can measure performance against that, and then through your reporting, you can look at some of your key performance indicators and then take corrective action to make sure that you're not off track. The problem is, if you're reliant on your tax accountants, it could be too late by the time that you realise that your business needs fixing. You're generally running out of money, etc., and it gets to a point where you cease to trade. So the reporting in the first instance should be as frequent as you can do. Quarterly, I would suggest as a minimum. Monthly would be ideal. You can look to see how you're performing, and then you can take action. With a forecast can come in one of two forms. We'll probably touch on one of them later on. One will be around cash. And in business, cash is king, and without cash, we can't operate. What people should be doing is, particularly in the current environment, is looking forward. No 2 days at the moment 2 days seem to be the same. What you can't see is what's going to come in the future. We may well have set off the year with fanciful plans or not. It might be converse. But the reality is things have changed. In fact, I was talking to somebody earlier this week who has gone from being on JobKeeper earlier on in the year to now is expanding at fast rates. And businesses are like that. But he now needs to have a forecast to see what his cash needs are, to make sure that he's keeping himself on line. The opposite of that may well be if there's been a downturn in your business, you may need to then look at the forecast to see where you can save money going forward, because ultimately you've got to get through to the end of the year and make profit. So yeah, I would say it's a key tool in business, particularly in SMEs, to produce both monthly reports, but also look forward on a forecast in terms of both profit and cash.
I'm absolutely with you there, Nick, especially with the reporting, because what I do find is, yeah, the tax accountants get it at the end of the year, and what's done is done in that year. But actually, if you report on a monthly basis, you can do something proactive around the business. So yeah, so you can see what your trading was for that month, and bookkeeping is great for that, because you can get the monthly report and make all the tweaks and what's going on, and be a little bit more agile in business when you've got those reports each month.
And as a very specific example, I am working with a business at the moment whereby we've been impacted by COVID down in Melbourne. We looked at our forecasts and we decided to put staff on 3 days a week for a couple of months to save money, and it should see us through the rest of the year. Yes, unfortunately, it hurts people in their pockets, but they accepted that it was better to have a full-time job when we come out of COVID-19. But that was by doing a forecasting exercise and seeing what the impact would be on the business.
Yeah. Now, Matt, being a finance broker, and business owners, of course, are looking to borrow monies, how important is all this reporting?
Yeah, look, accurate reporting is really critical to a finance application. Having up-to-date figures really puts businesses, especially ones that have come through COVID-19, in really good stead when we're looking to try and apply for working capital, term finance, or whatever the need may be in the business. So having up-to-date financials enables the finance broker to run through and see where your business is today, see the challenges that you may have faced throughout COVID, and see how you've overcome those challenges, and then present that to a bank in a manner that's going to get us the best possible lending position for that business.
Right. So when you're submitting something for, some borrowings from the bank, a forecasting document, does that help?
Absolutely. So especially in times like this, so when we have a business that may have had a full trading cycle through to March, and then they've been directly impacted by COVID-19, and they've had 3 months of no trading. So their FY20 accounts aren't going to reflect the full year of profit for that business. Now, what we found really useful is looking at month-to-month accounts all the way through to the end of March, annualizing those accounts, and then using the last couple of months trading to provide a really robust forecast that we can present to the bank and show the direction of the business post COVID-19 and show that full year of trading for FY20.
And is it industry specific that the banks are looking at? Like, so if you're, say you're a restaurant, for instance, and you're looking to borrow X amount of hundreds of thousands or whatever it might be, will the bank look at your last year's numbers and then take into consideration we're in COVID-19, you've got half the amount of seating capacity, so how can you actually forecast your numbers? But are you saying that the last 2 months, which is really what it's going to look like for the next few months, are they looking at the numbers that way?
So they are, and it really is horses courses. So because the environment is changing so quickly, it is difficult for banks to provide the commitments that they could prior to COVID-19. So what we're looking to try and do is provide the current day view of the financials, provide a reasonable projection on the trading capacities we have at the moment, but also take into consideration the history of the business and the history of that trading as well. I must caveat that it is individual circumstances that we need to look at. Banks are a little bit gun shy at the moment with those businesses that have been affected by COVID. It's always worth having a good chat with your bookkeeper, your accountant, and your finance broker to work out what can work for you. Yeah,
right. Okay. And I suppose one of the areas that business owners, I have to say, don't even bother looking at, because, you know, we're busy doing the accounts and they're really actually not even interested in the reports half the time, are they, Nick? Because the balance sheet is something that really, they just, whatever, we leave it up to you, but really they should know. So how important do you think the balance sheet is?
Well, yes, I think you're right there, Trudi. For a lot of people, it's just an irrelevant piece of paper that, you know, it's printed off by the system. Unfortunately, you know, there are some key numbers that sit in the balance sheet that, as a business owner or a business director, are key. If you look at the responsibilities of the directors or the business owner, particularly around solvency and the implications that fall out of you falling foul of that, you know, the key indicators for that come from the balance sheet. There are things like the current ratio where you can look at your debtors and your creditors and your cash and work out Have you got the ability to meet your debts as and when they fall due? So things like that are key. But in addition, you can look at it month on month and see what's happening with things like debtors and stock and creditors. Is stock blowing out? Because if the stock's growing month on month in your balance sheet, it tells you there's probably a problem and that you're manufacturing, not producing too much or buying too much. And again, as we talked about in the forecasting, you need to change your habits. So whilst to some people it's just a balancing plug at the end of the day. You take one period, you make a profit and you get another balance sheet. There are key numbers in there: cash, debtors, creditors. And as I say, one of the key things that comes out of it that all directors and business owners need to be aware of is their ability to pay their debts as and when they fall due, and therefore to remain solvent and not get themselves in any problems. If you get to a position where you are looking at it and your ratio falls below 1, it's not the end of the day, but then it would be suggesting more and more that you should be taking professional advice and making sure that you steer your business in the right way, because you do not want to end up down the track where it's getting worse and worse and worse. And potentially the director or the business owner can become personally liable for any future claims from creditors.
Yeah, and I suppose from a finance broker's perspective, when you're putting papers together, for the banks, what are the key areas you're looking at on the balance sheet?
Well, look, I think Nick touched on some really good points. It's the stock turn, it's the debtor days, and it's the creditor days. And what the bank does is they overlay that with the client's terms that they provide and receive from their creditors and debtors. And we want to make sure that those terms are aligned. Is there any outliers? What is the concentration of the debtors? Is there anyone that's not paying their bills? And that's a hygiene factor for the bank. They want to see that those terms are being appropriately managed, to make sure that if they have lending with that bank, that everything on the balance sheet is working well, that's going to translate into revenue and profit and allow the business to pay their debts.
Yeah.
And I would say if the business got to a position where it had borrowed money from a bank, it will become even more important, because there may well be covenants tied to the loan, some of which will be related to profit, but some of them may well be related to balance sheet ratios, and therefore, it's going to be key coming back to our monthly reporting that they're looking at them on a monthly basis and not waiting until the end of the year when the tax accountant produces the year-end accounts and goes, oh, look, you failed. Because at that point, you're going to be in trouble with the bank.
That's a really good point. So some of those covenants are going to be tied to a lot of those balance sheet metrics. Yeah. So you definitely don't want to leave it to the end of the year and then potentially get a breach notice, because then it's too late to change anything. But if you are having those interim reviews with your key advisors, you can alleviate any of those problems.
Yeah. Okay. And you touched on it before, Nick, cash is king. So have you got some tips and tricks that you'd like to share on managing cash and cash flow? I mean, one of the things that we do in bookkeeping is on the phone and chasing debtors.
Yeah, I think, obviously there are some key things in terms of just making sure that you keep your debtors as clean as you possibly can. And I guess as a step back from that, is ensuring that you don't extend credit to people who are not going to pay. You've got to understand, again, cash is king. You can sell things to people, make a profit, but at the end of the day, if they don't pay you, it doesn't help. So yes, there are key things. Obviously, one like the debtors is very important. And on the other side of it is ensuring that you get the most out of your creditors. You get the best terms you possibly can. Some people will give you 60 or 90 days because they want your business, to make sure that you do that and you keep to it. And again, to a degree, you can usually extend it. But again, the thing I would always say to people is once you've made a promise, keep to it. Because if you don't keep to your promises, then next time people will just not give you any extra headroom. There are some within the cash that you don't want to exploit. The OSR tends to be very harsh.
Unforgiving,
you need to make sure that people like the OSR are kept up to date. Another one which people, SMEs particularly, have been known to exploit is superannuation. And again, that is a minefield. Once you get into that with the ATO, you will find that you will get severe penalties. And again, from a moralistic perspective, it's people's money. It's part of their salary. It should be paid at the end of the month or the end of the quarter. Again, in terms of some of the things like that, if cash is an issue, you can go on to monthly passes. You can go on to monthly superannuation payments. Some businesses struggle. They go through the quarter and then they come to the end of the quarter and they go, oh no, I've got a massive BAS, and I've got a massive super. So there are other ways of dealing with it. But again, I come back to part of that is then having a cash flow forecast. So at least if you go out, I would say you want to go out at least 13 weeks. Your 13 weeks captures your BAS and your superannuation if you are doing it on a quarterly basis, which tend to be the peaks of expenditure for people. But if you're running that, you should be able to notice when you're going to have a problem. You should be able to deal with it. Again, I've got a client who I've been working with at the moment who COVID has significantly affected them. But when you look at the balance sheet at the moment, it looks healthy. It's November when it's going to bite because it's the payment term, it's the credit terms with our debtors, which tends to be 45 to 60 days. So with our 13-week cash flow forecast, it tells us November is where we're going to hit the pain. You have that. You can deal with it. You can make sensible decisions. If you just sit blindly and hope that things are going to work out, believe me, it won't.
Yeah, and it's something like what we actually do, because we're processing payrolls and we're managing the BAS, is that every time we roll a payroll process, we actually put the PAYG, W and the super aside in a separate account. So therefore it's the gross wages and the super that is being put aside, as well as every month the GST, if the client is paying their BAS on a quarterly basis, we say, well, this is the provision for your GST, so let's put it in the other account. So because I have to say, so many business owners, they look at their bank account and go, oh, there's plenty of money going on in there, and seriously they need to put it in a side account to say, you know what, that's my real money now, because what is in the provision account is going to cover all those taxes and liabilities.
I think that's a great idea, Trudi, and I have seen it, I would say probably in about 25 to 50% of the businesses I've dealt with across the years, where they will have a separate GST
Absolutely.
and tax account, and yes, they move the money monthly.
Yeah.
Hopefully.
Well, yes, that's a common practice we have in here, because I don't want business owners thinking they've got all the money in the world, and really they don't. So,
and look, from a banking perspective, having that there and having the tax portals up to date, paid on time, that is what the banks want to see. They don't want to see any arrears in your BAS or in your income tax. We want to see those tax portals clear, because that again is the best case scenario for a bank, because the ATO can come in at any time, as we know, and take what's theirs.
Yes, right. And from the bank's perspective, it's not when they want to borrow some money, it's about the servicing, right? So how does that affect the borrowings and cash and all that mix of reporting? Your take on what the banks are looking at when they're looking for servicing on debt?
Absolutely. So there's two main things that we're looking at when we're doing a lending application. And the first is security. So what can we look to take comfort in when we're extending funds? Is it the cash flow of the business? Are we lending against the balance sheet because we're comfortable with the balance sheet? Or is there some landed security, commercial or residential security that we can take? Or asset finance, can we take some comfort over the assets? The second is serviceability. So that is the income coming in from the business to be able to service the business's debts and potentially the director's debts as well. So having a nice clear view of the income coming through from the final accounts, interim accounts, if we can get interim accounts as well, and the cash flow forecast is going to put the client in the best position when we look to proceed with finance.
Yeah, right. And I think one of the areas, I'm going to call it a big area, because not many business owners pay too much attention to in how it does actually affect their cash, is their pricing of products. Nick, you've got loads of experience in this. Share.
Yeah, I think one of the things that you do find quite horrific is that the number of businesses who don't really know how to price their product. The price is often driven by what the market will pay, which is fine. Again, at the end of the day, there's no point having a product that nobody can afford or will buy. But conversely, you've got to make sure that you're making money on it. And typically, what people think about when they're pricing their products is the direct costs. The materials they've got to buy, the direct labour that goes with it. What is forgotten about is the overhead, the costs of running your offices, the cost of having accounting staff, the cost of marketing, etc., etc. You've got to make sure that you reflect that. And again, going back to things we were talking about earlier on, like forecasting, in a position like we've found ourselves over the last few months of COVID, the overhead rate of a business may well change. So you need to be mindful of that. That if you were selling staff, for example, and you were working on the basis that you would expect staff to be 80% utilised, and based on an 80% utilisation, you come up with an overhead rate that you build into your pricing. If because of COVID-19 or anything else, that rate drops, actually your overhead rate is going to go up. So you need to think about that when you're costing. You may not want to do it on a regular, you might not be doing it weekly, but you need to at least review it on a regular basis. Yes, product pricing, I just find it incredible that people do not pay much attention to it, because at the end of the day, that's what's going to generate your profit. So yes, very much keep an eye on it.
And how does that impact the borrower when, people wanting to borrow money? Does the banks look at that as well?
Absolutely. So when we're analysing the balance sheet and the P&L at the end of the year and the cash flow forecast, we're looking at those metrics. So if there is a dilution of the gross profit, if we're finding that the expenses are creeping up and that's diluting the overall profit we can use for servicing, that does have a real impact. And sometimes you can actually use some financial tools to mitigate that. If you've got foreign exchange risk that you're importing goods, you can look at some FECs, some foreign exchange contracts to lock and hedge those rates, so you've got some stability, so you can price those products. You can look at fixed rates for some of your variable rate loans, and all these kind of things are going to help you get back to what Nick was saying about pricing the product correctly and factoring in everything in, so you can make sure you're making money at the end of the day.
Right. In saying that, I see so many clients where really they're not even looking at margin. They just think, oh yeah, my revenue is X, and then straight to the bottom line. I'm like, well, you could increase that bottom line by just a couple of points, but I think it's part of an education piece, for business owners. But I truly believe business owners need to be aware that really do what they do best. If you're a lawyer, be a lawyer. If you're a tradie, be a tradie. If you're a professional services, just do that. The amount of times I see business owners trying to do their own bank reconciliations, or they think, oh, Xero is really easy, let me do it. Oh, what mess are they creating? And of course, Nick, you would see that in the reports, right? I mean, you're trying to see a monthly report and see where you're going with this business, but when you've got a business owner trying to do their own accounts, oh, what a nightmare. Yeah,
I think, Trudi, you're very right. What the business owner needs to do is concentrate on what they're good at. And I think working with professional people, bookkeepers, tax accountants, and part-time CFOs like us, enables them to do that, to concentrate on growing their business, which ultimately is what they're probably there for. And also, by having people like us in the background, they're almost like an insurance factor that enables them to be comfortable that the numbers are correct. Yes, to Trudy's example about whether the business owner goes off and does his own stuff, the number of times we have found things that have gone and incredible. You would not put in the exam questions some of the silly things that we find, but people just live with it. They just go, oh, it is what it is. Well, no, it's not. It's wrong.
I saw a really classic one just recently. So, the cash flow boost that came in. The business owner thought he was being really smart and he thought he could do the reconciliation. Well, guess where he posted it to? Revenue line.
No.
So these are the examples that go on. But, from the day-to-day accounts going to the reporting, and those reports are going to the bank. So, the likes of Matt, being a finance broker, and there's some of the stories I'm sure he sees in some of these reports is quite interesting. So I think, in the circle we have right now, we could probably write a book on some of the stuff that we've seen, right?
Absolutely.
So, but really the business owner should be just sticking to their core product. They know what they're excellent. I would never dream of doing what our clients do, what they do, even like hairdressers, I wouldn't touch someone's hair.
No.
So, why would they touch their books?
Correct.
So,
and I think in all areas, because ultimately, a number of times I've been and borrowed money on behalf of clients. And if we get the process right between the reporting, the forecasting, what we put forward through a broker like Matt to the bank, makes life so much easier. And you can do it very quickly. Conversely, I've seen people who've got bad accounts turn up, think that the bank's just going to lend them money. Live in the real world. That doesn't happen anymore.
Well, that's a really interesting point, because it's not always the colour of the bank. You want to make sure that you're presenting the best possible case forward to that bank with the right reporting, the right forecast, and making sure everything's correct. And then, more importantly, giving it to the right banker. who you know has confidence and knows your industry and can actually present your case to the bank and get the right outcome. So going to your local branch is an option, but it's not always going to yield the best outcome.
Can I just say, with all of our clients, I encourage them to see a broker. I do not want them to go directly to the bank, because the bank is biased. When you're going to the likes of the top four, they've got their own rules and they're quite biased, and they will say yes or no. But guess what? That also goes against the client's credit rating as well, because they've actually applied for something and they might be rejected on certain amount of, you know, and then it goes to the next bank, and then it goes to the next bank. That just creates chaos. So, you know, I encourage, if you're going to try and get some money from a bank, please see a broker.
Again, I would support that. Recently raised a couple of million for one of my clients, and we ended up dealing with a bank who I'd never heard of. But we went through a broker, and it was a very seamless process.
Yeah. Well, thank you, people, for watching us today, and I hope you managed to get some tips and tricks out of today's session, and go and enjoy what you do best and have fun while you're doing it. Thanks for now. Bye.
Thank you.
Thanks, guys.